Before we begin, a quick and important disclaimer. The creator of this video is not a licensed insurance agent or financial advisor. This presentation is for informational and educational purposes only, based on publicly available information and extensive research. It should not be considered financial or legal advice. Insurance products, coverages, and rates vary significantly based on your individual circumstances, location, and the specific independent agent you work with. Always consult with a qualified, licensed professional to discuss your personal needs before making any insurance decisions. Imagine this for a second. You're driving home, minding your own business, and bam, someone runs a red light and plows into the side of your car. Your heart is pounding. Adrenaline is coursing through you. But you're okay. Shaken but okay. Your car, however, is a mess. Later, after the police reports are filed and the tow truck has hauled away the wreckage, you do what you're supposed to do. You call your insurance company, and you're met with a robot. An endless phone tree of pressing 1 for this and 7 for that. You finally get a human, someone in a call center 1,000 miles away who asks for a policy number you can't possibly remember right now. The whole process feels cold, impersonal, and designed to be as difficult as possible. It feels like you're just a number in a system, and in your moment of absolute need, the company you've been paying every single month is treating you like an inconvenience. We have all heard a story like this. Maybe we've even lived it. It's the single biggest fear we have about insurance, that when we actually need it, it won't be there for us. But what if there was a different way? What if, when you made that call, a real person answered? Not just any person, but someone you knew. A local agent, right in your community, who already knows your name, knows your policy, and whose first words are you okay? Don't worry, we will handle everything from here. That difference, that fundamental shift from being a policy number to being a person, is what we're exploring today. We are doing a deep, comprehensive dive into one of the most highly rated, yet surprisingly unknown insurance companies in the United States, Auto Owners Insurance. By the time this is over, you will know exactly who they are, what makes them fundamentally different from the giants you see advertising during every football game, what their customers really think about them, and most importantly, you'll be able to decide if their unique approach is the right one to protect you, your family, and your financial future. So, who on earth is Auto Owners? If you haven't heard of them, you're not alone. They don't spend billions on celebrity endorsements or goofy mascots. They don't flood the airwaves with catchy jingles. Their name is simple, direct, and frankly a little old-fashioned. And that's by design. Auto Owners Insurance was founded way back in 1916. Let that sink in. For over a century, while other companies have come and gone, been bought and sold, Auto Owners has been quietly, steadily doing business. They are a Fortune 500 company, but they operate with a completely different philosophy. And the absolute core of that philosophy, the one thing you have to understand to get what they're all about, is this: you cannot buy Auto Owners Insurance online. You can't call a 1-800 number and get a policy in 15 minutes. You can only get it one way, through a local independent insurance agent. Now your first reaction might be, wait, that sounds inconvenient. Why would I want to do that? It's a fair question in our instant gratification world. But this single strategic choice is the secret to their entire success, and the reason they consistently dominate customer satisfaction awards. Let's break down why this matters so much. When you buy insurance from one of the big direct-to-consumer companies, you are the one doing all the work. You go to their website, you plug in your information, and an algorithm spits out a price. You are responsible for choosing your liability limits, your deductibles, your uninsured motorist coverage. Do you really know the difference between 100/300/100 and 250/500/100 in a real-world accident scenario? Do you know how your state-specific laws on personal injury protection might affect you? For most people, the answer is no. You're essentially performing surgery on your own financial safety net with a tool you barely understand. With Auto Owners, the model is flipped on its head. The independent agent is your guide. Think of it like this. Buying insurance directly online is like going to a massive hardware superstore to build a deck. You're faced with 100 different kinds of screws, 20 different kinds of wood. You're on your own, and if you pick the wrong materials, your deck could collapse. Working with an independent agent is like hiring a master carpenter. They come to your house, they assess your needs, they understand the local building codes, and they build you a rock-solid deck design specifically for you. The agent works for you, not for the insurance company. Their job is to understand your life, your cars, your home, maybe a boat or a business, and find the best possible protection from the companies they represent, one of which is Auto Owners. This agent becomes your single point of contact. You have their direct phone number. When you have a question, you call them. When you need to add a new car or a new driver, you call them. And most critically, when you have a claim, you call them. They are your advocate. They help you file the claim and they act as a liaison with the claims adjuster. They fight for you. This human element, this relationship, is something an algorithm or call center simply cannot replicate. It's the difference between a transaction and a partnership. Now, this all sounds great in theory. A friendly local agent, personalized service. But does it actually work in practice? Does this old-fashioned model actually deliver a better result when things go wrong? The answer is a resounding yes, and we don't have to take their word for it. We have the data. Year after year, the most respected name in consumer satisfaction, J.D. Power, releases its studies on the insurance industry. And year after year, auto owners is at or near the very top, especially in the single most important category, auto claim satisfaction. This isn't a fluke. In the 2023 U.S. Auto Claim Satisfaction Study, they were ranked among the absolute best, outperforming nearly all of the household names that spend a fortune trying to convince you they're the best. Why is this claim satisfaction rating so important? Because the claim is the moment of truth. It's the one time you actually use the product you've been paying for. An insurance policy is just a promise on a piece of paper until you have an accident. An A+ rating in claim satisfaction means that when their customers were in that horrible situation we described earlier, stressed, scared, and vulnerable, the company delivered on its promise. It means the process was fair, the communication was clear, and the settlement was handled efficiently. This is the ultimate report card for an insurance company, and auto owners consistently get straight A's. This high level of satisfaction is a direct result of their agent-focused model. It's proof that having a human advocate in your corner makes a tangible, measurable difference in the outcome. It's all captured in their simple, yet powerful slogan, the no problem people. It's a bold claim. Insurance, by its very nature, deals with problems. Accidents, theft, lawsuits, these are all serious problems. By branding themselves as the no problem people, auto owners is making a promise. They're saying that when you face one of life's biggest problems, they will be the solution, not another layer of frustration. And based on their history, their business model, and the consistent praise from their actual customers, it's a promise they seem to take very, very seriously. They've built a century-long reputation not on flashy ads, but on being there for people, one claim, one customer, one independent agent at a time. So now we know who they are. A stable, long-standing company. And we know their philosophy. A relentless focus on customer service through a network of dedicated independent agents. But the big questions remain. What specific coverages do they offer? Can you get more than just auto insurance? How does their pricing actually compare to the big online guys? And are there any downsides to this model? Is it really for everyone? We are going to tackle all of it, breaking down the nuts and bolts of their policies and the real-world cost to see if this old-school approach to insurance still holds up in the modern world. So let's start with a scenario. Picture this: you're driving home, maybe listening to a podcast, thinking about what's for dinner. The light ahead turns yellow. You slow to a stop, but the driver behind you doesn't. You hear that sickening crunch of metal and plastic. Your heart sinks. Now what? In this single stressful moment, the promises made on a piece of paper by your insurance company become incredibly real. This is where the foundation of any good policy, including one from auto owners, is truly tested. The absolute bedrock of your car insurance policy is liability coverage. If you only remember one thing, remember this: liability is for the other guy. It's not for you, it's not for your car. It's for the damage you cause to other people and their property. This is the part of your insurance that's legally required in nearly every state. Think of it as your financial shield against the world. Auto owners, like all insurers, splits this shield into two distinct parts: bodily injury liability and property damage liability. Let's talk about bodily injury first. This covers the medical expenses, lost wages, and even pain and suffering for the people you might injure in an at-fault accident. When you see numbers on your policy like 50/100/25, the first two numbers are for bodily injury. 50 means your policy will pay up to $50,000 for any single person's injuries. 100 means it will pay up to $100,000 total for injuries for the entire accident, no matter how many people are hurt. Now you might be thinking, my state only requires 25/50, so I'm good. This is one of the most dangerous financial mistakes a person can make. Imagine you cause an accident that sends someone to the hospital for surgery and weeks of rehab. Those bills can skyrocket past $25,000 in a matter of days. Once your insurance limit is hit, where does the rest of that money come from? Comes from you. They can go after your savings, your investments, even put a lien on your house. This is why getting the bare minimum is like bringing a water pistol to a firefight. Then there's the second part of that shield: property damage liability. That's the last number in our 50/100/25 example. The 25 means your policy will pay up to $25,000 to repair or replace whatever property you damaged. This is usually the other person's car, but it could also be a mailbox, a storefront, or a city light pole. Again, $25,000 sounds like a lot, until you realize the average price of a new car in the US is now close to $50,000. What happens if you rear-end a brand new Tesla or a luxury SUV? That $25,000 limit evaporates instantly, and you're on the hook for the rest. This is why experienced agents, especially the independent agents auto owners works with, will almost always recommend liability limits of at least $100/300/100 or even higher. It's the single most important and least expensive way to protect your entire financial future. Okay, so liability takes care of the other person. But what about your car? That's where the next two pillars of coverage come in: collision and comprehensive. They work as a team, but they cover very different things. Collision coverage is exactly what it sounds like. It pays to repair or replace your car if it's damaged in a collision with another object. That object is usually another car, but it also covers you if you hit a pole, a guardrail, or even a pothole that damages your suspension. Collision is what fixes your car after that fender bender we talked about. Now, this coverage always comes with a deductible. A deductible is simply the amount of money you agree to pay out of pocket before the insurance company starts paying. Think of it as your share of the repair cost. A common deductible is $500 or $1,000. So, if you have a $1,000 deductible and the repairs cost $5,000, you pay the first $1,000, and auto owners pays the remaining $4,000. The higher your deductible, the lower your premium will be, but the more you'll have to shell out if you have a claim. It's a trade-off between saving money now versus spending money later. But what if your car is damaged when you're not even driving it? What if a tree branch falls on it during a storm? Or it gets stolen from your driveway? Or a deer decides to use your front grille as a shortcut? That's not a collision. That's where comprehensive coverage comes in. Its official name is other than collision coverage, which is a perfect description. It covers damage from things like theft, vandalism, fire, hail, flooding, and hitting an animal. It's the life happens coverage. Just like collision, it has a deductible that you choose. For many people, having both collision and comprehensive, often called full coverage, is essential, especially if you have a car loan, because your lender will almost certainly require it to protect their investment. So now we've protected the other guy with liability, and we've protected your car with collision and comprehensive. We're all set, right? Not quite. We've been operating under one huge assumption: that if another driver hits you, they're a responsible person with good insurance. But what if they're not? What if the driver who rear-ended you has no insurance at all? Or what if they only have the bare minimum state limits, which can't even begin to cover your new car and your medical bills? This is a terrifyingly common scenario. It's estimated that 1 in 8 drivers on the road is uninsured. This is why uninsured and underinsured motorist coverage exists. It is, without a doubt, one of the most critical and often overlooked coverages you can buy. It steps in and acts like the other driver's insurance when they don't have any, or don't have enough. Uninsured motorist bodily injury pays for your medical bills, and your passenger's medical bills if you're hit by an uninsured driver. Underinsured motorist kicks in when the at-fault driver has insurance, but their low-level policy can't cover all your expenses. In some states, you can also get uninsured motorist property damage to fix your car, which can be a great option if you don't carry collision coverage on an older vehicle. This coverage is you, insuring yourself against the irresponsibility of others. Finally, there's one more layer of protection that deals directly with injuries, but in a much faster and simpler way. It's called medical payments coverage, or MedPay. In some states, it's replaced by a more comprehensive version called personal injury protection, or PIP. Think of this as immediate, no questions asked health coverage for injuries you and your passenger sustain in a car accident, regardless of who was at fault. If you get into an accident and need to go to the emergency room, you can use your MedPay coverage right away to pay the bills, without waiting for the insurance companies to figure out who is to blame. It can cover health insurance deductibles, co-pays, and other expenses. While your health insurance might cover these things eventually, MedPay is fast and specifically for auto accidents, providing a crucial financial buffer when you need it most. These 5 components, liability, collision, comprehensive, uninsured/underinsured motorist, and medical payments, form the core of almost every auto owner's policy. They are the essential building blocks. Getting these right, with the right limits and deductibles for your specific situation, is 90% of the battle. But what about the other 10%? What about the special features, the unique add-ons and endorsements that can turn a standard policy into an ironclad safety net? These are the options that most people don't even know exist, but they can be absolute lifesavers, covering everything from a rental car to a brand new vehicle replacement. And that's where the true value of a company like Auto Owners can really shine. Let's break that down, because this is where the game truly changes. This is the difference between having insurance and having a rock-solid financial shield. We're moving beyond the basics of liability and collision into the world of endorsements. That's the industry term for add-ons or riders. Think of your standard policy as the foundation and frame of a house. It's essential, it's strong, but it's not the whole home. These endorsements are the roof, the windows, the security system, the things that protect you from the specific storms of life. First up, the one that people regret not having the second they need it. Rental reimbursement, also known as transportation expense coverage. It sounds simple, right? If your car is in the shop after a covered accident, the insurance helps pay for a rental car. But let's play this out in the real world. You're driving to work, someone runs a red light and T-bones you. You're okay, thankfully, but your car is not. It's towed to a body shop, and the mechanic gives you the news. We have to order parts from Germany. It's gonna be at least 3 weeks. 3 weeks. 21 days. How do you get to work? How do you pick up your kids from school? How do you get groceries? Suddenly, you're looking at a rental car bill. Let's be conservative and say it's $40 a day. 40 times 21 is $840. That's an unexpected, unbudgeted, $800 plus bill you have to pay out of pocket, all because of someone else's mistake. Rental reimbursement coverage turns that nightmare scenario into a minor inconvenience. For a few extra dollars on your premium each month, you can have coverage that pays that $40, $50, or even $60 a day for you. It's one of the highest value per dollar endorsements you can buy, and Auto Owners is known for making this process incredibly smooth, often having direct billing arrangements with major rental companies, so you don't even have to front the money yourself. Now let's talk about the big one, the one that protects your single biggest investment after your home, your brand new car. You know that feeling, the new car smell, the flawless paint, the odometer with double digits. You also know the brutal truth about depreciation. The moment you drive that car off the lot, its value plummets. So imagine this, you save up, you buy your $25,000 dream car. 2 months later, a distracted driver plows into it in a parking lot, and it's declared a total loss. Your standard collision coverage will pay you the actual cash value, or ACV. That's the value of the car the second before the crash. But because of depreciation, the ACV might only be $22,000. So the insurance company cuts you a check for $22,000, and you're left without a car and $3,000 short of what you just paid for it. Feels like a punishment. This is where Auto Owners offers a powerful 1-2 punch. The first is called new car replacement coverage. This is the holy grail. If your new car is totaled within a certain period, usually the first year or two, or within a certain number of miles, they don't just give you the depreciated value. They give you the money for a brand new, current model year car of the same make and model. No haggling over depreciation. No feeling shortchanged. You get a do-over. You get your new car back. This coverage is an absolute must for anyone buying new. The second part of that punch is loan and lease gap coverage. This is for everyone who finances or leases their vehicle. Let's go back to our totaled car example. You bought it for $25,000, but after your down payment, you still have a $24,000 loan on it. The insurance company pays you the actual cash value of $22,000. You still owe the bank $2,000. You are literally making payments on a pile of scrap metal. This is what's called being upside down on your loan, and it's a financial trap that snares millions of people. Gap coverage pays that difference. It covers the gap between what the insurance company gives you and what you still owe the finance company. It ensures you can walk away from a totaled vehicle with a clean slate, not with a lingering debt from a car that no longer exists. Having one or both of these coverages is like having a financial airbag for your car loan. But the protections don't stop with the big, catastrophic events. What about the smaller but incredibly stressful ones? I'm talking about being stranded on the side of a highway at 10 p.m. with a flat tire. Or walking out to your car on a freezing January morning to find the battery is completely dead. This is where Road Trouble Service comes in. It's more than just towing. It's your on-call mechanic. It typically covers towing to the nearest qualified repair shop, delivering gas if you run out, jump-starting a dead battery, helping with a flat tire, and even lockout service if you accidentally leave your keys in the car. Instead of frantically searching on your phone for a tow truck and wondering how much it's going to cost, you make one call. One call and help is on the way with the cost already covered by your policy. It's about replacing panic with a plan. Now, I want to talk about an endorsement that 90% of drivers have never even heard of, but it addresses a hidden financial loss that happens after almost every single significant accident. It's called diminished value coverage. This is a brilliant and incredibly fair concept. Let's say your one-year-old $40,000 SUV gets into an accident. It's not totaled, but there's significant damage. You take it to the best body shop in town, and they do an absolutely perfect repair. It looks and drives like it's brand new. Your collision coverage pays for the $10,000 repair bill. Everything seems fine. But a year later, you decide to sell or trade in that SUV. The potential buyer runs a vehicle history report, like a Carfax, and sees major accident reported. Instantly, the value of your vehicle in their eyes, and in the eyes of the market, has dropped. Even though it's perfectly repaired, that accident history is a permanent stain on its record. That SUV that should be worth $30,000 is now only worth $27,000. You've lost $3,000 in value through no fault of your own. That loss is called diminished value. In most states, with most policies, you just have to eat that cost. But with the diminished value endorsement, like the one auto owners offers, you can file a claim to be compensated for that loss in market value. It's the insurance company acknowledging that a repaired car is never quite the same as a car with no accident history, and they make you whole for that difference. It is one of the most under-the-radar, high-value protections you can get, and it shows a level of detail and customer focus that sets a company apart. When you start layering these protections together, rental car coverage to keep you on the road, new car replacement or gap to protect your loan, road trouble service for peace of mind, and diminished value to protect your resale investment, you see a very different picture of what car insurance can be. It's not just a legal requirement. It's a comprehensive strategy to insulate your life and your finances from the chaos of the road. It's about anticipating the what-ifs, so you don't have to panic when they actually happen. This is the advisory role where a good independent agent, the kind that auto owners exclusively uses, becomes your most valuable asset. They can walk you through these options, explain the costs and benefits, and help you customize a policy that's a perfect fit, not a one-size-fits-all box. So we've built this incredible fortress of protection around your vehicle, covering it from every conceivable angle. But now comes the big question, the one you're probably screaming at the screen right now: what does all of this cost? You might be thinking this sounds incredibly expensive, that a policy this robust must be reserved for the wealthy. But what if I told you there's a whole suite of discounts, some of which you probably qualify for right now without even knowing it, that can dramatically slash the price of this premium protection? The secret isn't just in what you add, but in how you save. And the biggest money savers are often the ones hiding in plain sight. Let's start with the absolute heavyweight champion of insurance discounts, the one that can single-handedly change your entire premium: the multi-policy discount. This isn't just a small perk. For auto owners, it's a cornerstone of their entire business model. They want to be your one-stop shop, and they are willing to pay you handsomely to make that happen. When you bundle your auto insurance with your homeowners, renters, or even a life insurance policy, you're not just getting a little $10 off coupon. You're unlocking a foundational rate reduction that can be as high as 25%, sometimes even more, depending on your state and the policies you combine. Think about that. A quarter of your bill gone simply for keeping your policies under one roof. This is the first question your independent agent should ask you, and if they don't, it's the first one you should ask them. It's the lowest hanging fruit, and it's also the biggest. But that's just the appetizer. Let's talk about stacking. The real magic happens when you start layering these discounts on top of each other, creating a cascade of savings. Right alongside the multi-policy discount is its close cousin, the multi-car discount. If you have more than one vehicle in your household, you are almost certainly leaving money on the table if they aren't on the same policy. Insurers love this because it's more business for them, but it's also statistically safer. A household with 2 cars doesn't necessarily drive twice as much, and they reward you for that efficiency. Combining 2, 3, or even 4 cars onto a single auto owner's policy can lead to significant savings on each vehicle. Now let's get into the discounts that reward you for how you live and manage your finances. These are the no-brainers. First up, the paid-in-full discount. Most people opt to pay their insurance bill monthly because it feels more manageable. But insurance companies have administrative costs for processing 12 payments a year instead of 1 or 2. They will give you a discount, often a very noticeable one, if you pay your entire 6-month or 1-year premium upfront. Do the math. If the discount for paying in full is, say, 8% on a $2,000 annual premium, that's $160 back in your pocket. You'd be hard-pressed to find a savings account that gives you that kind of guaranteed return on your money in a year. If you can swing it, it's like getting free money. Paired with that is the paperless discount. In 2024, there is almost no reason to get a thick envelope of insurance documents mailed to your house. By opting for e-delivery of your bills and policy documents, you save the company money on printing and postage, and they pass a small but meaningful discount on to you. It's easy, it's good for the environment, and it saves you money. It's a trifecta of wins. Another easy one, the advance quote discount. Insurance companies love customers who plan ahead. If you get a quote from auto owners more than a week before your current policy expires, they'll often give you a discount just for being organized. It shows you're a responsible planner, which, in their eyes, makes you a lower-risk customer. Let's move on to the family. This is where the savings can really start to multiply, especially if you have young drivers in the house. We all know that adding a teenager to your policy can feel like your wallet just got hit by a freight train. But auto owners has some powerful ways to mitigate that cost. The first is the good student discount. This is a big one. If you have a driver in high school or a full-time college student under the age of 25 who maintains a B average or better, you need to be sending that report card to your agent. This can slash the cost of that young driver's premium by up to 20%. Why? The data is crystal clear. Students who are responsible in the classroom tend to be more responsible behind the wheel. Then there's the student away at school discount. Let's say your son or daughter goes to college more than 100 miles away from home and doesn't take a car with them. They might only drive when they're home for winter break or the summer. You can't take them off the policy entirely because they're still a licensed driver in your household, but you can get a massive discount because their exposure to risk has plummeted. They aren't commuting to class or driving around a college town every day. This is a discount people forget about all the time, and it can save you hundreds of dollars a year. And for those really looking to leverage technology, Auto Owners offers their telematics program, called True Ride. This is a mobile app that you and your teen driver download. It monitors driving habits in the background, things like hard braking, rapid acceleration, late-night driving, and phone usage. Now I know what you're thinking. I don't want my insurance company tracking me. And that's a fair concern. This is optional. But if you have a teen who is a genuinely safe driver, this is a way to prove it and get rewarded for it. After an evaluation period, safe driving habits can lead to a substantial discount, turning that high-risk premium into something far more manageable. It's a data-driven way to prove you're not a statistic. Next, let's talk about your car itself. The vehicle you drive is a rolling collection of potential discounts. Most modern cars are packed with safety features, but you don't automatically get credit for them. You or your agent have to make sure they're listed on your policy. Anti-lock brakes? That's a discount. Airbags, especially side curtain and dual-stage airbags? That's a discount. Daytime running lights? Believe it or not, that can be a discount. These features reduce the likelihood of an accident or the severity of injuries if one happens, so the insurer rewards you. The same goes for anti-theft devices. If your car has a passive alarm system that arms itself automatically, or a vehicle recovery system like LoJack that lowers the risk of a total theft loss, that's a discount. Don't just assume your insurer knows your car has these things based on the VIN number. Double-check your policy. A 5-minute conversation with your agent to confirm these features could shave 5 to 10% off your comprehensive coverage costs. Finally, there are the discounts that reward you for being a good, loyal customer over time. Auto Owners has a favorable loss history discount. This is beautifully simple. If you go a certain number of years, typically 3 to 5, without filing a claim or having any at-fault accidents, your rates go down. You've proven yourself to be a safe, low-risk driver, and they reward you for it. This isn't just about avoiding a surcharge for an accident. This is an active discount for maintaining a clean record. It's their way of saying thank you for not costing them money. And then there's the simple loyalty discount. The longer you stay with auto owners, the more valuable you become to them. Many of their policies include a discount that kicks in after you've been a customer for a few years, and it often grows over time. This is their defense against you shopping around every year. They make it financially appealing to stay put. So you see, it's not about one magic bullet. It's about a strategy. You start with the big one, the multi-policy bundle. Then you layer on the easy wins like paying in full and going paperless. You meticulously account for every member of your family, from the good student to the one away at college. You get credit for every single safety and anti-theft feature in your vehicle. And you leverage your own good behavior, both your clean driving record and your loyalty to the company. By the time you've stacked 4, 5, or even 6 of these discounts, the premium you were first quoted can look drastically different. This is how you transform a premium insurance product into an affordable one. It's not about cutting corners on coverage. It's about being a savvy consumer and claiming every single dollar of savings you are entitled to. But all of these discounts, this great price, this carefully crafted policy, it's all just a promise. It's a piece of paper or a file on a server that says a company will be there for you when things go catastrophically wrong. A great price means absolutely nothing if the company vanishes, raises endless roadblocks, or fights you tooth and nail when you actually need to file a claim. So, what really happens when you have to make that dreaded phone call? What is the auto owner's claims process actually like, from the moment of the crash to the moment the check is in your hand? The answer to that question is the single most important factor in choosing an insurer, and it's exactly what we're breaking down next. It's 3 p.m. on a Tuesday. The sun is glaring off the car in front of you. You're stopped at a red light, thinking about what to make for dinner when you hear it. The screech of tires that seems to last an eternity, followed by a sickening metallic crunch. Your head snaps back. Your heart feels like it's trying to punch its way out of your chest. You've just been rear-ended. In that moment, 1,000 thoughts flood your mind. Is everyone okay? How bad is the damage? And the big one, what happens now? This is the moment of truth for your car insurance. All the promises from the commercials, all the monthly payments you've made, it all comes down to this. How an insurance company handles this single, chaotic, and deeply personal event defines their entire worth. So, let's walk through this exact scenario with auto owners. The first step is called the First Notice of Loss, or FNOL. It's the official starting gun for your claim. Auto owners, true to their philosophy of choice, gives you multiple ways to fire that gun. The most common, and the one they are built around, is a simple phone call to your local independent agent. This is their secret weapon. In a moment of high stress, you're not dialing a faceless 1-800 number and navigating a labyrinth of automated menus. You're calling someone you might know by name, someone whose office is in your community. You're calling a person who can immediately offer a calm voice and clear instructions. They know the process inside and out and can begin filing the claim for you right then and there. But what if the accident happens at 2 in the morning on a holiday weekend? Your agent is probably asleep. This is where the modern side of auto owners kicks in. They have a 24/7 claims hotline you can call directly. You can also file your claim through their mobile app, snapping pictures of the damage, the other driver's info, and the scene right on your phone, or you can log into your account on their website. The point is, you're not left stranded. The path is always open. Once that first notice is in, the clock starts ticking. The next thing that happens is you're assigned a claims adjuster. And this right here is arguably one of the most critical forks in the road for any insurance experience. Many of the giant national carriers use massive, centralized call centers. The adjuster assigned to your case might be in a different time zone, completely unfamiliar with your state's specific regulations or the reputation of local body shops. They're working off a script, managing a caseload of hundreds of claims from all over the country. Auto owners takes a fundamentally different approach. They overwhelmingly use their own, in-house adjusters who are based locally. The person handling your claim for a fender bender in Grand Rapids, Michigan, likely lives in or near Grand Rapids, Michigan. This isn't just a small detail. It's a game changer. This local adjuster understands the regional nuances. They have established relationships with the body shops in your area. They know which ones do quality work and which ones to avoid. They're not just a voice on the phone. They're a local resource. This local presence is designed to speed things up and reduce friction. Your adjuster will typically contact you within 1 business day to introduce themselves, explain the next steps, and schedule a time to inspect your vehicle's damage. Now we get to the nuts and bolts. getting your car fixed. This is where things can either be incredibly smooth or a complete nightmare. Auto Owners operates what they call their appraisal services program, which is a network of pre-approved, certified collision repair shops. If you choose to use one of these shops, the process becomes incredibly streamlined. You take your car in, the shop and your Auto Owner's adjuster communicate directly. They agree on the scope of the repairs and the cost, and work begins. Auto Owners pays the shop directly, minus your deductible. And here's the kicker. Any repairs done at one of these affiliated shops come with a lifetime warranty backed by Auto Owners. As long as you own the vehicle, the work is guaranteed. This creates immense peace of mind. But are you forced to use their shops? Absolutely not. You always have the right to take your car to the mechanic of your choice. If you have a trusted local body shop you've been using for years, you can absolutely go there. The process is just slightly different. Your adjuster will either visit that shop to inspect the damage and approve the estimate, or in some cases, they may have you get an estimate and submit it for approval. It might involve an extra step or two, but the freedom of choice remains yours. While your car is in the shop, what are you supposed to do? If you have rental reimbursement coverage on your policy, and this is an optional add-on we highly recommend, Auto Owners will help set you up with a rental car. They have direct billing arrangements with major rental companies, so you're not paying out of pocket and waiting for a check. You just pick up the car, and your policy's daily limit covers the cost. Okay, let's talk about the worst-case scenario. The adjuster looks at your car and declares it a total loss. This is a devastating moment for any car owner. The cost to repair the vehicle is more than its actual cash value. So what happens? First, what is actual cash value, or ACV? It's a term that causes a lot of confusion. It does not mean what you paid for the car. It means what your car was worth in the open market the second before the accident occurred. The adjuster determines this value by looking at a number of factors: the year, make and model, the mileage, the overall condition, and the sale prices of comparable vehicles in your local area. They'll compile a report showing you exactly how they arrived at that number. Once the value is agreed upon, Auto Owners will pay you that amount, minus your deductible. They will also typically handle the process of taking possession of the totaled vehicle and dealing with the salvage title. This is a painful process no matter who you're insured with, but the goal of a good insurer is to make it as clear, fair, and efficient as possible. The transparency of the valuation report and the guidance from a local adjuster can make a world of difference in feeling like you were treated fairly. Throughout this entire journey, from the initial phone call to the final payment, your independent agent acts as your advocate and guide. If you're confused about a term the adjuster used, you can call your agent. If you feel like the process is taking too long, your agent can make a call on your behalf to get an update. You are not alone in the system. This dual support structure, a dedicated local claims adjuster from the company and a dedicated local agent on your side, is the core of the Auto Owners claims philosophy. It's designed to replace the anxiety and confusion of a typical claim with clarity and confidence. The goal isn't just to pay the claim. It's to retain you as a happy customer. They know that a single bad claims experience can erase years of brand loyalty. So their process is built on a foundation of local expertise, direct communication, and customer choice. It's about making you feel like a person, not a policy number, during one of the most stressful events a driver can face. But this is the process on paper. This is the story of how it should work. How does it actually stack up in the real world when put to the test by hundreds of thousands of real customers? What do the satisfaction scores, the industry awards, and the unfiltered online reviews really say about the Auto Owners claims experience? We've sifted through the data, the accolades, and the angry one-star complaints to find the ground truth. And that's exactly what we're digging into next. Let's start with the heavyweight champion of customer satisfaction metrics, J.D. Power. For decades, they've been the gold standard, the independent referee in the chaotic world of consumer products. And when it comes to auto claim satisfaction, their annual study is the Super Bowl. They don't just ask people, "Hey, were you happy?" They dissect the entire experience into 6 crucial stages. First, notice of loss, which is that initial, often frantic phone call you make. Then, claim servicing, the ongoing communication and handling by your adjuster. The estimation process, where they figure out what the damage is going to cost. The repair process itself. The rental car experience, because you still need to get to work. And finally, the settlement, the final check that's meant to make you whole again. So, where does Auto Owners land in this gauntlet? Year after year, they are not just in the running, they are consistently on the podium. In the J.D. Power 2023 U.S. Auto Claims Satisfaction Study, auto owners scored an impressive 903 out of a 1,000-point scale. To put that in perspective, the industry average was 873. This wasn't a fluke. They consistently rank in the top tier, often battling for the #1 spot. This isn't just an on a report card. It's a testament to a process that, on a massive scale, works. It tells us that when thousands of their customers were in the thick of it, stressed, without a car, and facing a mountain of paperwork, a significant majority walked away feeling respected, fairly treated, and satisfied with the outcome. These are not just numbers. They represent countless stories of fender benders, hail damage, and major collisions where the company delivered on its promise. But let's be real. J.D. Power studies are the polished, aggregated, big-picture view. They're like looking at a city from a satellite. To really understand the neighborhood, you have to walk the streets. And the streets of the internet are paved with customer reviews, the raw, unfiltered, and often brutally honest accounts from people who have just lived through the claims process. This is where the pristine image from the awards shelf meets the messy reality of individual experiences. Before we dive in, we have to acknowledge the golden rule of online reviews: emotional bias. People who have a terrible experience are 10 times more likely to shout it from the digital rooftops than someone who had a perfectly fine, uneventful claim. A smooth process is what you expect. A nightmare is a story you have to tell. So we read these with a grain of salt, looking not for single explosive anecdotes, but for recurring themes, both good and bad. Let's start with the 5-star raves, the glowing testimonials. What's the common thread? Overwhelmingly, it's the independent agent. The stories sound remarkably similar. It's a Friday night, you're in a minor accident, and you're flustered. You don't call a 1-800 number and navigate a phone tree from hell. You call your agent, Sarah, the one whose office is down the street. She picks up or calls you right back. She knows your name, she calms you down, and she starts the process for you immediately. By Monday morning, an adjuster has already been in touch. These positive reviews are filled with words like seamless, effortless, and compassionate. Customers talk about adjusters who showed up quickly, were professional, and explained everything clearly. They talk about repair estimates that were fair and approved without a fight. They describe getting a check for their totaled vehicle that was actually in line with its market value, allowing them to go out and buy a comparable car without digging into their own savings. The hero of these stories is almost always the local agent acting as a guide and advocate, shielding the customer from the corporate bureaucracy and making a stressful situation manageable. It paints a picture of insurance the way it's supposed to work: a personal relationship with the trusted advisor who has your back when things go wrong. Now we have to flip the coin. We have to venture into the dark alley of 1-star reviews, where the language is not seamless but nightmare, unresponsive, and insulting. If you spend any time here, a different pattern begins to emerge, and it's a crucial one. A significant portion of the most scathing reviews aren't from auto owners' own customers. They're from the other person in the accident, the person who was hit by an auto owner's driver. This is a critical distinction that applies to almost every insurance company. When you are the claimant, not the customer, the dynamic shifts entirely. The company's legal and financial obligation is to their policyholder, not to you. And this is where the complaints flood in. People describe a completely different experience. Adjusters who are impossible to reach, phone calls that go unreturned for weeks, and a feeling of being stonewalled. They talk about initial settlement offers for their damaged vehicle that are, in their words, laughably low, forcing them into a long, drawn-out negotiation process while they're stuck paying for a rental car out of pocket. For these people, auto owners isn't the compassionate protector. It's the adversarial gatekeeper of funds, doing everything in its power to minimize the payout. Their experience is one of frustration and feeling powerless against a giant corporation. But what about the 1-star reviews from their own policyholders? Yes, they exist too. And what's the theme there? It often mirrors the opposite of the 5-star experience. The customer feels like their agent has disappeared. They're stuck dealing directly with a corporate claims department, and they feel like just another number. They complain about the same slow communication, the same delays, and the same lowball offers on repairs or total losses that the third-party claimants do. They talk about being passed from one adjuster to another, having to re-explain their situation over and over again. It's the impersonal bureaucratic nightmare that everyone fears when they file a claim. So what's the final verdict when you put the J.D. Power trophies next to the chaotic online reviews? A fascinating and incredibly important picture comes into focus. Auto Owners appears to be a company of two experiences, and the dividing line is almost always the quality and involvement of your independent agent. When you have a great proactive agent, you get the 5-star J.D. Power winning experience. Your agent acts as a concierge, a quarterback who runs the play for you, ensuring the corporate machine processes your claims smoothly and efficiently. They are your advocate inside the system. But if you have a less engaged agent, or if you're a third-party claimant trying to get money from the company, you risk falling into the bureaucratic abyss. You end up dealing directly with the large, and at times, seemingly indifferent claims department, and your experience can quickly devolve into the one-star nightmare scenarios. This reveals the fundamental truth of the Auto Owners model. The system is designed to work through the agent. The agent isn't just a salesperson. They are the intended customer service interface. Your entire experience from getting a quote to, most importantly, filing a claim, hinges on the competence and dedication of that one local office you choose. It suggests that choosing your Auto Owners agent is just as, if not more, important than choosing Auto Owners itself. This incredible level of service, this award-winning claims process, when it works, sounds fantastic. It sounds like a premium product. And that always leads to the million-dollar question, or in this case, the $1,000 a year question: what does it cost? Is this a classic case of you get what you pay for, where top-tier service comes with a top-tier price tag? Or has Auto Owners somehow cracked the code to providing this personal, agent-driven service at a competitive rate? We're about to peel back the layers on their pricing structure, explore the myriad of discounts they offer, and see how their rates stack up against the competition. So, how have they cracked the code to providing this personal, agent-driven service at a competitive rate? We're about to peel back the layers on their pricing structure, explore the myriad of discounts they offer, and see how their rates stack up against the competition. The secret isn't some complex algorithm hidden in a vault. It's actually built right into the DNA of the company itself. First, you have to understand that Auto Owners is a mutual insurance company. That might sound like dry, industry jargon, but it is the absolute bedrock of their pricing philosophy. Unlike a stock company, which is owned by shareholders and legally obligated to maximize their profits, a mutual company is owned by its policyholders. That's you. Think about that for a second. When the company does well, the profits don't go to Wall Street investors. They belong to the people who actually pay the premiums. This gives Auto Owners two powerful options. They can reinvest that money back into the company to improve service and keep rates stable for the long haul, or they can return it directly to you, the policyholder, in the form of dividends. This structure fundamentally changes the company's motivation. Their goal isn't to squeeze every last penny of profit out of you. It's to create a stable, financially healthy pool of risk that benefits everyone involved. The second piece of the puzzle is that independent agent. We've talked about them as a service advantage, but they are also a critical part of the pricing equation. These agents aren't just order takers. They are the frontline underwriters. A good agent in your community understands the local risks, but more importantly, they understand you. They sit down with you, ask the right questions, and make sure you're not just getting the cheapest policy but the right policy. This prevents a common problem in the insurance world: people being underinsured. When a major accident happens, an underinsured person can face financial ruin, which creates a massive, unpredictable claim for the insurance company. By having agents ensure proper coverage from the start, Auto Owners cultivates a healthier, more predictable risk pool. Healthier risk pools mean fewer catastrophic losses, which translates directly into more stable and competitive rates for everyone. It's a virtuous cycle. Good advice leads to proper coverage, which leads to a stronger company, which leads to better prices. Now let's get down to brass tacks. How is your premium actually calculated? Like any insurer, Auto Owner starts with the universal basics: your age, your driving record, the type of car you drive, where you live, and in most states, your credit-based insurance score. These are the non-negotiables of the industry. But where Auto Owners truly begins to separate itself is in its extensive arsenal of discounts. This isn't just about saving a few bucks here and there. It's about strategically stacking discounts to build a truly personalized and affordable policy. Let's group these discounts into a few key strategies. First, you have the loyalty and bundling stack. This is their bread and butter. The multi-policy discount is the heavyweight champion here. By bundling your auto insurance with your home, renters, or condo insurance, you can see a significant reduction in your premium. But they take it a step further. If you also have a life insurance policy with them, you unlock the Life Multi-Policy discount, which adds even more savings on top. They reward commitment. Pay your premium for the full term up front, That's a paid-in-full discount. Consistently pay on time? There's a discount for that too. They are actively encouraging and rewarding long-term, stable relationships. Next is the good behavior and safety stack. This is where they reward you for being a low-risk driver. The most famous of these is the good student discount. If you have a young driver on your policy who maintains a B average or better, the savings can be substantial, helping to offset the notoriously high cost of insuring a teen. Have a student who's away at college without a car? The student away at school discount recognizes they aren't driving daily. And for those really looking to maximize savings and encourage safe habits, they offer a telematics program, their True Ride program, which monitors driving behavior like braking, acceleration, and phone use to offer a discount based on actual real-world safety. Finally, there's the proactive and smart choices stack. This is for people who plan ahead and make safe decisions before they even get behind the wheel. Have you been with your previous carrier for a while with no claims? That's a favorable loss history discount. Did you get a quote from them before your current policy even expired? That's an advance quote discount. Does your car have factory-installed safety features like anti-lock brakes, airbags, or anti-theft devices? You guessed it, there are discounts for all of those. Now, lists of discounts are one thing, but let's see how this plays out in the real world. Imagine a young couple, we'll call them Sarah and Tom. They're in their late 20s, just bought their first house, and have two reliable 5-year-old cars. They go to an auto owner's agent. Right off the bat, they're bundling their new home and their 2 cars, unlocking the multi-policy and multi-car discounts. They both have clean driving records and decent credit. They decide to pay their 6-month premium in full to get that extra discount. In one consultation, they've stacked 4 powerful discounts to make their premium incredibly competitive, all while getting comprehensive coverage for their biggest assets. Or what about the Miller family? They have a 16-year-old son, Mark, who just got his license. Their premium is about to skyrocket. Their agent advises them. Mark is a good student, so they immediately qualify for that discount. They enroll him in the True Ride telematics program, which not only gives them a discount but also gives them peace of mind. The agent also points out that the 15-year-old sedan they gave Mark to drive is much cheaper to insure than a new sports car. By strategically using these 3 tools, good student, telematics, and a safe vehicle choice, the Millers are able to manage the teen driver sticker shock and turn a stressful situation into a manageable one. So, how does all of this stack up against the big names you see on TV every 5 minutes? Here's the honest truth. If you are looking for the absolute, rock bottom, cheapest possible price and nothing else matters, auto owners might not always be the winner in a 10-minute online search. Their model isn't built to compete with the bare-bones, direct-to-consumer giants on price alone. Their competitive advantage lies in value. They are consistently priced at or below other major agent-based carriers like State Farm or Allstate, while often being praised for superior service. When you compare an auto owner's quote, you're not just comparing a number. You're comparing a comprehensive policy, crafted by a professional, from a company owned by its policyholders, with an award-winning claims department backing it up. The question isn't just, how much does it cost? The real question is, what do I get for my money? With auto owners, the answer is often, a lot more than you thought. The price on the page is just the beginning of the story. It's the promise. But the true test of any insurance company, the moment where they either deliver on that promise or break it, comes when you need them most. When the glass shatters and the metal crunches, the real value isn't found in the premium, but in the claims check. And that's where we're going next. We're going to dive deep into the auto owner's claims process, pull back the curtain on their J.D. Power topping satisfaction ratings, and find out what happens when you have to make that dreaded phone call. It's a Tuesday afternoon. The light turns green. You ease your foot off the brake, but the car behind you doesn't. The sound is unforgettable. A sickening crunch of metal and plastic. Your head snaps back. Your heart hammers against your ribs. This is it. This is the moment every driver dreads. You're shaken, but thankfully everyone seems to be okay. After exchanging information and calling the police, you're left standing on the side of the road, looking at a crumpled bumper, a shattered taillight, and a problem that feels impossibly large. You pull out your phone, your thumb hovering over your insurance app. This is the moment of truth. This is where the promises made in commercials and the premiums you pay every single month transform into real-world action or inaction. For our purposes, let's say you're an auto owner's customer. What happens now? The first step is known in the industry as the first notice of loss, or FNOL. It's your first official contact with the insurance company about the incident. With auto owners, you have two primary paths. You can call your local independent agent, the person you likely bought the policy from. This is the path they champion. Your agent knows you. They can offer immediate reassurance, walk you through the initial steps, and get the ball rolling on your behalf. They act as your advocate from minute one. Or you can use the 24/7 claims line or their mobile app to report the claim directly. This is often faster, especially if the accident happens after hours or on a weekend. Either way, the goal is the same: to get the basic facts of the incident into their system. Who, what, where, when, and how. You'll be assigned a claim number almost immediately. This number is your golden ticket, the key to tracking everything that happens from this point forward. Here's where auto owners starts to differentiate itself, and it's a key reason they consistently dominate J.D. Power's U.S. Auto Claims Satisfaction Study. It's not about flashy tech. It's about speed and communication. In most cases, you can expect a call from an assigned claims adjuster within a few hours, not a few days. This initial call is crucial. A good adjuster does more than just ask questions. They set expectations. They'll explain the process, confirm your coverages, like whether you have rental car reimbursement, and tell you what the next steps are. They're there to turn a chaotic, stressful event into a manageable step-by-step process. This single, empathetic, and efficient phone call can make or break an entire claims experience. Now let's talk about getting your car fixed. The adjuster will need to assess the damage to determine the cost of repairs. Again, you have options. Auto Owners has a network of pre-approved, affiliated repair shops. If you choose one of these, the process is incredibly streamlined. The shop works directly with auto owners. The estimate, the repair approvals, and most importantly, the payment are all handled directly between them. You just drop off your car and pick it up when it's done. This is the path of least resistance. But what if you have a mechanic you've trusted for 20 years? You are absolutely not required to use their network. You can take your car to any shop you choose. The process is just slightly different. Your chosen shop will write up an estimate, and your auto owner's adjuster will review it. They'll negotiate any differences in labor rates or parts costs with the shop, and then authorize the repairs. Once the work is complete, auto owners will issue a payment. Sometimes it goes directly to the shop. Other times it's a check made out to both you and the shop, or even just to you. The key takeaway is flexibility. They make it easy to use their network, but they don't penalize you for wanting to use your own trusted mechanic. While your car is in the shop, what are you supposed to drive? This is where your rental reimbursement coverage kicks in, if you have it. It's an optional coverage, but one that's worth its weight in gold when you need it. Auto Owners typically has direct billing arrangements with major rental companies like Enterprise. Your adjuster will help you set up the rental, and the insurance company pays the rental agency directly, up to your policy's daily and total limits. For example, $30 a day for a maximum of 30 days. You just pay for the gas and any extra insurance the rental counter tries to sell you. No paying out of pocket and waiting for a reimbursement check. It's seamless. This entire sequence, the fast initial contact, the clear communication, the flexible repair options, the direct pay systems, this is the machinery behind that #1 J.D. Power ranking. That study isn't just a vague popularity contest. It measures satisfaction across 6 key factors. First notice of loss, the claim servicing, the estimation process, the repair process, the rental experience, and the final settlement. Auto owners' strength isn't just in one area. It's their consistent high performance across the entire board. They've built their reputation not on having the lowest price, but on delivering a superior product when you actually need to use it. The company culture, trickling down from corporate to the local agent to the claims adjuster, is centered on a no-problem philosophy. Their goal is to find a way to pay the claim fairly and quickly under the terms of the policy. But what happens if the damage is more severe? What if the airbag's deployed and the frame is bent? What if the repair shop says your car is a total loss? This is another moment of high anxiety. Your car is gone. Now what? The process shifts slightly. An adjuster will determine your vehicle's actual cash value, or ACV, the moment before the crash. This is not what you paid for it or what you think it's worth. ACV is the market value. What a similar car with similar mileage and in similar condition would sell for in your local area. To do this, they use third-party valuation services that analyze sales data from dealerships, private sales, and auctions. They'll present you with a detailed valuation report showing the comparable vehicles they use to arrive at their number. This is often a point of contention with any insurance company. People naturally feel their car is worth more. With auto owners, their adjusters are generally given the latitude to be reasonable. If you can provide evidence, like recent maintenance records for new tires or a new transmission, or listings for truly comparable vehicles in your area that are priced higher, they will often listen and adjust their offer. Once you agree on a value, they will pay you that amount minus your deductible. If you still owe money on the car, they'll pay the lender first and you'll get the remainder. If you have gap insurance, that's when it would kick in to cover any difference between the settlement and what you still owe. This entire claims ecosystem, from a simple fender bender to a devastating total loss, is handled with a distinctly human touch. Because you're dealing with a local agent and often a local adjuster, there's a level of accountability that's hard to replicate in a massive, faceless call center. The person managing your claim might shop at the same grocery store or have kids in the same school district. That local connection is the secret sauce. It's what transforms a transaction into a relationship. It's the reason so many of their policyholders talk about the peace of mind they feel, knowing that if the worst happens, they won't be fighting a bureaucracy. They'll be calling a neighbor for help. The claims process is the ultimate test of an insurance company. It's where a policy document becomes a promise kept. For auto owners, their consistent top-tier performance proves that their model of local agents and customer-centric service isn't just an old-fashioned idea. It's a powerful competitive advantage that delivers when it matters most. But let's be brutally honest. No company is perfect. For every story of a seamless, wonderful claims experience, there's a counter-narrative. There are situations where things don't go smoothly, where communication breaks down, and where customers are left feeling frustrated and angry. So, what are the common complaints? What are the potential pitfalls you need to be aware of before signing on the dotted line? What happens when the no-problem company has a problem? We're about to look at the other side of the coin, the negative reviews, and the reasons why auto owners might not be the right fit for everyone. Every insurance company has a shadow. It's the side you don't see in the commercials with smiling families and reassuring taglines. It's the collection of stories whispered in online forums, the frustrated reviews left late at night, and the fine print that suddenly becomes very, very large when things go wrong. For auto owners, a company built on a foundation of stellar customer service ratings, this shadow can be even more jarring for those who experience it. Let's start with the very thing we've praised, the independent agent model. On paper, it's fantastic. A local expert, a friendly face, someone who knows your name. But what happens when that agent isn't a top performer? What if they're overworked, inexperienced, or just not very good at their job? Suddenly, that single point of contact becomes a single point of failure. Some customers report feeling trapped in a frustrating triangle between themselves, their agent, and the corporate office. You call your agent about a claim, and they say they need to hear back from the adjuster. You try to call the adjuster, and you're told all communication must go through your agent. This can create a bottleneck, a frustrating game of telephone where you, the paying customer, are stuck in the middle, just trying to get a straight answer. While a great agent is an incredible asset, a subpar one can make a difficult situation feel impossible, turning a personalized experience into a personalized nightmare. The quality of your entire relationship with auto owners can hinge on the competence of one individual you may not have even chosen yourself, but were simply assigned to. This brings us to the absolute heart of any insurance complaint, the claims process. This is the moment of truth. For years, you pay your premiums on time, no questions asked. The company happily takes your money. Then the worst happens. Crash. A tree falls on your car. You file a claim, expecting that no-problem service you've heard so much about. But for some, what follows is a starkly different reality. A recurring theme in negative reviews is the perceived slowness of the claims process. Days turn into weeks with little to no communication. Adjusters become ghosts, impossible to reach by phone or email. You're left in limbo, without a vehicle, without answers, and with a growing sense of dread. Then there's the issue of settlement offers. Some disgruntled customers have reported receiving initial offers that they felt were shockingly low. Offers that wouldn't even come close to covering the actual cost of repairs at a reputable body shop, let alone the diminished value of their vehicle. This forces the policyholder into the uncomfortable position of becoming a negotiator. You have to fight, to argue, to provide your own quotes and evidence, just to get what you believe you are fairly owed under the policy you've been paying for. For someone already dealing with the trauma of an accident, this added battle can be emotionally and mentally exhausting. It feels less like a partnership and more like an adversarial relationship. While J.D. Power scores show high overall satisfaction, it's crucial to understand that for those in the minority, the experience can be deeply frustrating, feeling like the company's priority has shifted from helping them recover to protecting its own bottom line. Let's talk about technology. In a world dominated by slick apps and instant online service, auto owners can feel dated. They've been around since 1916 and sometimes it shows. Their digital presence is often cited as a significant weakness compared to newer, more agile competitors. Customers who are used to managing every aspect of their lives from their smartphone may find the Auto Owners app and website to be clunky, limited in functionality, or just not very intuitive. Simple tasks like printing an ID card or checking the status of a claim might be more cumbersome than they should be. If you're someone who wants to make a policy change at 10 o'clock at night without having to wait for your agent's office to open the next morning, Auto Owners' traditional, agent-centric model might feel restrictive. In an age of instant gratification, being told you'll have to call your agent for that can be a major point of friction for a growing segment of the population. This isn't just about convenience, it's about control and transparency, and for some, the digital tools simply don't measure up. Another significant drawback is availability. It's simple, but it's a deal breaker for millions of Americans. Auto Owners is only available in 26 states. If you live in California, New York, Texas, or Florida, some of the most populous states in the country, you're out of luck. You can't even get a quote. This also presents a problem for existing customers who might be planning a move. If you have a great rate and a long, happy history with Auto Owners in Michigan, but you get a job offer in Oregon, you'll be forced to shop for a whole new insurance company. This lack of a national footprint makes them a non-starter for a huge portion of the U.S. market and a potential liability for customers with a mobile lifestyle. Finally, let's touch on something that affects every single policyholder: price. While Auto Owners is often competitive, especially for those with a perfect driving record and the opportunity to bundle multiple policies, they are not always the cheapest option. In fact, for some driver profiles, they can be significantly more expensive. Drivers with a less than spotless record, maybe a speeding ticket or an at-fault accident from a few years ago, might find much more competitive rates elsewhere. Furthermore, like any insurance company, they raise their rates. And some customers have expressed shock and frustration at the size of these increases, even with no claims or changes to their driving habits. This can lead to a feeling of being penalized for loyalty, where the great rate that got you in the door slowly creeps up year after year until you're suddenly paying far more than the market average. The hometown we know you feel can quickly evaporate when a renewal notice arrives with a double-digit percentage increase and a less than satisfactory explanation from your agent. It forces you to question whether the acclaim service is worth the premium price tag, especially if you've never had to use it. So we have a company praised for its service, but criticized for a claims process that can be slow and contentious. A business model built on personal relationships that can backfire if you get a bad agent. A reputation for stability that comes with the cost of lagging technology, and competitive rates that might not be competitive for you or might not stay that way forever. Paints a much more complex picture, doesn't it? It shows that even for a top-rated company, the experience is not universal. The very things that make Auto Owners a perfect fit for one person could be the exact reasons it's a terrible choice for another. This brings us to the final critical question. After weighing all the glowing praise against these serious potential pitfalls, how do you decide? Who is this company truly for, and who should absolutely steer clear? We're about to distill everything we've learned into a final verdict. Let's break it down. Auto Owners insurance isn't for everyone, and that's not a criticism. It's a core part of their identity. They've carved out a specific niche in a hyper-competitive market by focusing on a particular type of customer. So, who is the ideal Auto Owners customer? This is the person who views insurance not as a commodity, but as a relationship. They're looking for a partner, a trusted advisor for one of the most significant financial safety nets in their life. This person likely owns a home or is planning to. They have multiple assets to protect, a couple of cars, maybe a boat, an umbrella policy for liability. They see the value in bundling not just for the discount, but for the simplicity of having one point of contact, one trusted agent who knows their entire story. This customer is probably not a recent college grad hunting for the absolute rock-bottom state minimum liability coverage. Instead, they're established. They've worked hard for what they have, and the thought of a nightmare claims process after an accident is far more terrifying than paying a slightly higher premium each month. They want to make one phone call to their agent, a person they know by name, and trust that everything will be handled with professionalism and care. They value peace of mind over pinching every last penny. This person lives in one of the 26 states auto owners serves and likely prefers a face-to-face or phone conversation over navigating a complex app or chatbot. For this individual, auto owners isn't just an option. It's arguably one of the best choices they can make. The premium they pay is an investment in unparalleled service and the security of knowing a financially rock-solid company has their back. Now let's flip the coin. Who should probably look elsewhere? First and foremost, the pure price shopper. If your number 1, 2, and 3 priorities are finding the absolute cheapest premium on the market, auto owners will almost certainly not be your winner. Their model is built on service, and that service is factored into the price. You can likely find a cheaper quote from a direct-to-consumer company that has lower overhead. Second, the tech-forward do-it-yourself driver. If you want to manage every aspect of your policy from a slick, cutting-edge mobile app, make changes at 2 a.m. without talking to a human, and file a claim by uploading photos and videos from your phone, the auto owner's experience might feel archaic. Their digital tools are functional, but they are not best in class. The entire system is designed to funnel you toward your agent, not empower you to bypass them. Finally, and most obviously, if you don't live in one of the 26 states they operate in, they're simply not an option. And even if you do, if you're someone who moves frequently for work, you might hesitate to sign on with a company that can't follow you to California, Texas, or New York. For these drivers, the limitations of the agent-based model and the geographical restrictions are deal breakers. And there are countless other national carriers better suited to their needs. So let's distill this entire journey down to its essence. On one hand, you have the powerful positives. Auto owners boast some of the highest customer satisfaction ratings in the entire industry, year after year. This isn't just marketing fluff. It's a documented track record from objective sources like J.D. Power. Their claims handling is consistently lauded as fair, fast, and empathetic, the 3 things you desperately need after a crash. Their financial stability is A++ rated, meaning the company is a fortress. It has the money to pay its claims, no matter what. And their network of independent agents provides a level of personal guidance and advocacy that you simply cannot get from a call center or a website. These agents can shop multiple carriers for you and act as your champion if a problem arises. On the other hand, the negatives are just as clear. Their premiums are, on average, higher than many competitors. You're paying a premium for that premium service. Their geographical availability is a hard wall. If you're not in their territory, you're out. Their technological offerings lag behind the industry leaders, which can be a point of frustration for those accustomed to a seamless digital life. And the very thing that is their greatest strength, the agent model, can be a weakness for those who prefer an impersonal, direct-to-consumer approach. With all that said, here is the single most important piece of actionable advice I can give you regarding auto owners. Do not try to get a quote from them directly. Your goal should be to find a highly rated, local, independent insurance agent in your area. This is the crucial step. An independent agent is your free expert guide. They don't work for auto owners, they work for you. They have contracts to sell policies for multiple companies, which might include auto owners, but also Progressive, Travelers, Safeco, or a dozen others. Here's the strategy. You go to this agent and you say, "This is my situation, these are my cars, this is my driving record, and this is my home. I want you to find the best possible coverage for me at the most competitive price." The agent then does all the legwork. They will get quotes from all the carriers they represent. If auto owners comes back as the best option for your specific profile, fantastic. You've found a great match. But if another company offers similar coverage for a significantly lower price, the agent will tell you that too. This is the ultimate win-win. You leverage the agent's expertise to see if you fit the ideal auto owner's profile without putting all your eggs in one basket. You get the benefit of their top-tier service if they're the right fit, but you also get the benefit of market competition. This completely de-risks the process. So, what is the final verdict on auto owners' insurance? Think of it this way. Shopping for car insurance is like choosing a place to eat. There are fast food chains that are cheap, fast, and everywhere. They get the job done. This is like the big, direct-to-consumer insurance companies. Then there are high-end, bespoke restaurants with a famous chef. They're not on every corner. You need a reservation. The service is impeccable. The ingredients are top quality, and the experience is memorable. But it costs more. Auto owners is that high-end restaurant. It's not trying to be the cheapest or the fastest. It's trying to be the best. It's for the person who understands that the price on the menu isn't just for the food. It's for the chef's expertise, the attentive service, and the confidence that you're going to have a fantastic experience. Some people will always prefer the convenience and low cost of the drive-thru, and there is absolutely nothing wrong with that. But for those who are willing to invest a little more for a vastly superior experience, especially when things go wrong, auto owners is a reservation worth making. Ultimately, the choice comes down to a fundamental philosophy. Is car insurance a frustrating expense to be minimized at all costs? Or is it a crucial investment in your financial security and peace of mind? If you fall into the first camp, your search will likely lead you elsewhere. But if you believe in the latter, if you believe that in the chaotic moments after an accident the one thing you want is a calm, competent, and caring voice on the other end of the line, then you owe it to yourself to find an independent agent and see if Auto Owners has a seat at the table for you. Because buying insurance isn't just about preparing for the worst day of your life. It's about having the unwavering confidence that when that day comes, you won't be facing it alone.